Now, it's not just our personal lives that have actually evolved over the last 20 years. I think if you think blockchain represents a diversion or a complete divorce from what's traditionally happened in the real world, consider that in the last 20 years, there's been massive, massive change in financial institutions as well. Okay, so I'm just going to read you some things that have come to mind in my 20 years covering equities. Number one, before 1990, companies that had negative earnings never went public. You know, they were considered early stage. You'd have to pay a dividend before you ever went public. Well, in the 90s, that rule broke. Today, there's more private equity companies than publicly traded equities. Would you have ever guessed 20 years ago that the private market is bigger than the public market? I mean, it pretty much ruins, Finance 101. Bonds have a negative interest rate and people are buying them. Central banks did quantitative easing and had negative interest rates. And let's think about some more things. ETF trading is bigger than single stock. Derivatives are multiples the size of the cash market. So I might just say, if you don't think rules can evolve around understanding capital structures and businesses, we've already witnessed this. The rules have changed many times over the last 30 years.